Today's question is, what is the difference between market value and replacement cost when it comes to your home? It's important to know the difference because they mean two different things, and a lot of times people will assume that the coverage on their home is what they should sell their house for or what they bought their house for. Well, this is actually not the case. Market value is, for example, what you buy and sell homes for. It's what the lot's worth, what the comps in the neighborhood are going for. It actually has nothing to do with insurance. Insurance, however, is replacement cost. Replacement cost takes into consideration not necessarily the lot, but the cost of materials, drywall, sheetrock, 2x4s, permits, surveys, contractor fees. All of that is what goes into the house if you had to rebuild it. So that's what insurance should be. Again, land is not included. It's more construction costs using modern materials and current methods to rebuild your house. What's also important to know is that over time, that number changes. So you will often see inflation included in your homeowner's policy to keep up with the cost of labor, materials, supply and demand over time. Again, it's not to overinflate your home, it's just to keep up with replacement costs as times change. It's also important if you remodel a home or you put any significant value in renovations in your house that you always make sure insurance knows about that, because you don't want to sink a lot of money in your home and then forget to tell somebody and then it costs more to rebuild and not have sufficient funds to pay for it. It's also important to make sure you are properly insured, so make sure you contact your insurance professional to make sure that it's insured at replacement cost and not just what you bought it for. Stay tuned for the next question.